Okay, so everyone is hyped about the Golden Cross again. And I'm sure, guys, you've seen the headlines. Bullish Signal, the 50 SMA crosses the 200. Well, let me stop you there. If you're waiting for that cross to go long, you are not probably, you are definitely too late. The move has already happened. It's a lagging indication. So the golden cross is just the after party. Let me explain this to you. This is the golden cross. Some of you, one of you, shared this with me. I don't know who made the post. I would like to give them credit, but unfortunately, I don't know who it is. So I'm just going to use the chart. If you made this chart, let us know. But anyway, the Twitter and the social media is full about golden crosses today. So let's look at this chart. And you see here, it says there was a golden cross over here and over here. Already, they missed that pump. They even missed that rise, okay? I mean, the price had been rising already for a while. The same here, the indication would be to go short over here. And another golden cross, not a death cross, a golden cross over here. Okay, it would happen at this stage. So already they would have missed this. Okay, and now more lately at this stage over here, crosses under. So one would go short at that level, would go short at the very bottom, would go short at the time that they had to be buying. Okay, so that's exactly there. So that's a bad one. And right now there is a new one, they say. So golden cross. I'm gonna get this out of the way, guys, because it's nonsense. Okay, just look at this. It's not what you wanna do. Okay, so without further ado, I'm gonna show you how I use not SMAs, not simple moving averages, but EMAs, and why I don't use them all that much. So I have here an indicator which allows me to have two EMAs. I have selected my EMAs, and you can do the same, okay? And when the cross, there is this little plus sign over here, and you can see already that this is becoming a lot better if you fine-tune it with your own, okay? Just like I did. And you can get some very good entries, like let's go recently so we know what we're talking about. I mean, we would enter here. I would be the crossing, or we would be going short here. And it's a good indication, okay? But let's take the last one. So you're getting the golden cross now, okay? You're getting a golden cross after the price has already skyrocketed. And even with the cross, with the EMAs that I use, you will see that you will get an entry there, which is more like a confirmation that the trend will continue, but the trend started down here. So if I go all the way down and see exactly what would have been the optimal entry, that would have been 74,394. So can we get in then? That's what we should be looking at, okay? To cut the long story short, lagging indicators like the moving averages, that they move with the average. For the smaller time frame moving average to go over the long or mid, whatever you will be using term, moving average, it means that the market has already moved. For this moving average, for the average of the candles to move over here, it means the price action has already started, okay? So this for me comes third, fourth, fifth, the EMAs. That's why I don't post a lot of about EMAs. On contrary to that, I work with Trendlines. You can see here that 74,394, okay, which was the optimal, and then the 79,000 above it. And that is a level that we had been talking about many times. You can see over here, or if I go back, you see this same level, 79,000 and 74,394. The beauty of TradingView, you click on play to see how things played out, and that was the perfect entry. So I work with trend lines and I work with structure. So you'll see a lot of times I will post channels or other forms of structure, because at the end of the day, I have tried and tested so many things, and I know what works better for me, and it probably would work better for you. So the optimal entry, I'm afraid to say, it's not gonna come from a moving averages. Optimal entry will come from either trend line or structure, and we will use the cross or the EMAs or whatever you want to call it. Thumbs up to this fella here for his nice indicator. You can check it, the golden cross, and it's a confirmation. Okay, so let's not go crazy and let's not hype about the golden cross on Twitter again, because we've seen that before, and it's the headlines that are telling us that it has already happened, the party has already happened, and it's telling us that the party can continue, okay? Or it could mean that we are late to the after party, okay? And why are we late to the after party? Go back in this video on the second minute and you will see how the history of the Golden Cross was actually the end of the party in some occasions, and would have had you go short when you were meant to be buying. Okay, so yes, by the time the golden cross lights up, the smart money is already halfway to the next target. If they ask you to have a golden cross, tell them no thanks, and you can do things a lot better. And if you will use EMAs, use EMAs, not SMAs, okay? Because EMAs are fast reacting and they allow you to do things a little bit better as a secondary, third, fourth kind of tool together with your analysis. But for me, it's gonna be always trend lines or structure first. And if there is something before that, it's the fundamentals, understanding what to buy and why. End of the video with the most important thing you need to know today. If you're waiting for that cross to go long or short, you're late. The move has already happened. And yes, the golden cross is just the after party. You want to be at the party first so you can get the best chicks or whatever you like. Take care, guys.